Peter Eliades with you. This is Stock Market Cycles Update for the week ending June 26th, 2020. And it's being recorded Sunday afternoon. Right now it's 4:03 p.m. Pacific Zone, so that's 7 p.m. Eastern. Should be online within an hour or so. So there's a lot to talk about today. As most of you know by now, we did not do an update on Thursday. It was a real long driving trip for us. We went 4 hours to our destination where we attended a funeral, stayed overnight, and by the time it was time to come back, we never got a chance on Thursday night to do an update. So we apologize for that, but we're with you now, and we'll go into detail in terms of what we see. The chart you're looking at now is a chart of the Dow Jones Industrial Average, and this is a 7 to 8 day offset, nominal 20-day projection. Now, this is interesting. Look what happened here. This little red box here, this projection, is only taking this high into consideration and then looking at the crossing from that high going down here into this potential low. If we look only at that, then that would argue that we're a possibility of having a bottom. Remember, these are closing price projections now. But I think the better interpretation currently is that, remember we talked about nicks, and we thought that when this gave the upside projection from this low to this crossing right here, and then we talked about this being a potential nick on this day, if we could turn up and go immediately back above it. That would have been a downside nick, and the upside projection would theoretically have remained in effect if indeed we got right back above with a closing price. Well, that didn't happen. So now we have to consider the alternate way of interpreting the tick. This crossing here gave this downside projection, okay? 23,344, 23,758. Now, again, that was theoretically invalidated here, but what if for those 2 days that there was a crossing there, we edit the studies and we customize the studies and we put in a nick filter of a couple of days to take into consideration what could have been a false move there. So we go OK there and close here, and look at this. So what that's doing is it's ignoring this upside crossing right here. You can see that that was only a flimsy little crossing, just barely getting above the line and immediately going below both lines. So the argument can be made that this projection remains in effect. As we told you, 23,344, 45 rounded off, 23,758, okay? So the argument can be made this projection remains in effect. Unfortunately, the interpretation can go either way, so this is not what you'd call a high confidence downside projection, but it is there, so keep it in mind. Let's look at the next longer offset now, which would be the 12-1 to 13-8. That one gives a projection to between 24,170 and 24,595, let's say, rounded off. So both of those projections are talking about moves down into this area here. What makes that interesting is that, remember, our longer-term upside projections, significantly higher projections, look at this one right here. Actually, that one's not showing now because we have to go back. This is something for you that have the software, something for you to remember, that when you change something like the nick count, you've got to go back and rechange it again, or you're going to get some false readings. Okay, so there we go. This projection is back. Now, this is interesting. The Dow, on a closing basis, met that projection. Okay, now the one it did not meet is this one here. So there are still higher upside projections on the Dow, okay? But look where the offset line is for those projections. There's the possibility if we get to the lower end of the projection that you get an invalidation of this upside on the Dow. And if that's the case, then there are no further upside projections after that. So that's pretty important information, and it's something we're going to have to watch over the next several days. Let's take a quick look at the S&P. Okay, now it's very clear, this low, this crossing, it's very clear on the S&P that this is a 48.4 offset, 48.4 to 55.3, so that's a 10-week, the equivalent of a 10-week offset, nominal 20-week projection, and this is very much in effect. What would you have to do to invalidate it? Well, you'd have to get below this area here, which is around the 27, low 27 to mid 2700s on the S&P. Now let's take a look at their projections and see if we see something there. We'll go to the 7 to 8, and the same thing here. You see, this downside projection is just based on this very short-term crossing from this high to this crossing here. But if we go here and go into studies, edit studies, and customize this one, and put in our NIC filter again of 2, that reinstitutes this downside projection here, 2873 to 2911, rounded off, okay? So that 2873, now that's the lower end, so let's look at that, 2873, and now let's look at the 12-1 offset, the nominal 5 weeks. Remember, 2873, the lower end of this one is a lot higher than that. We're talking now about around the 2973 level right here. So if we just get down here, in fact, we closed inside that projection box on Friday. So there are a lot of things going on here. I mean, one of the interpretations, because this is the longest projection, the 12-1 to 13-8, and it has been met on a closing basis, the argument can be made that the market's ready to turn up again. But it's not quite that easy because there are alternate interpretations. Here's probably the most important one of all, though. Let's look at the NDX. Okay, on the NDX, let's zoom in on this. And in fact, let's make it even prettier by going to our web chart. So, and let's take away the intraday and just make it a closing price chart. Okay, so as you can see here, we did get a crossing. Here's the upper part of the continuum and the lower part. And that's why there's such a big box for the projection, because it's a pretty wide continuum, okay? And the projection here calls for 97.79 to 95.92.44. So here's the lower end, 95.92.44. Here's the higher end. We're really close to that. So any kind of short-term downside close here at the beginning of the week, and you could have met this projection. Doesn't mean you can't come all the way down to the far end of it, but you could meet it on a minimal basis with a very small decline on a closing basis on Monday. Okay? So keep that in mind, and let's go to the 7 to 8 and see if we see anything there. This one is a very clear projection, a clear crossing, a clear projection, and it calls for 96.07.74 to 97.24.27. Okay, now pay attention here. Let's look at the lowest projection of either one, the 7 to 8 or the 12-1 to 13-8. This one's 96. Let's call it 96.07. We'll go to the lower end of it, okay? And let's go back quickly to the 12-1. Remember, 96.07. The low end of this one is 95.92. So let's take the lower end here, the lowest closing price projection we have for over the next several days. That's 95.92. And now let's go to the longer offsets here, 24.2 to 27.6. Okay, now I think you remember that we told you several weeks ago the upside nominal 10-week projection, 5-week offset, had already been met on the NDX. The one that's outstanding here is the nominal 20-week projection, which is still significantly higher. That's way up here, okay? Now, what would it take to invalidate this? Well, you'd have to get well below the 9,000 level to invalidate this. And as you noted, the lowest projection we got that we showed you with the shorter offsets was nowhere near this level. So this projection is pretty safe right now, regardless of what happens in the short term, because the short-term projections don't lead to much lower than the numbers that we gave you in the prior two offsets. So that tells me that, first of all, let me give you an overall picture of where we stand in the market. I continue to believe that this was back in February of this year and has become once again one of the most, if not the most, overvalued markets in market history. So all these upside projections that we're looking at now, we pay attention to them because they're given by our very reliable cycle projections. But that doesn't mean that they can't be invalidated, and that doesn't mean that we can't see some kind of dramatic turn down from these levels. After all, the Nasdaq 100 has gone to a new all-time high after all the things that occurred in terms of our COVID-19 that's happened over the last several months. So I wanted to bring this all together for you. And I also want, there's going to be a longer update. I also want to show you a couple of other things. I want to show you, remember the sentiment chart I showed you the other day? Well, that sentiment chart, here it is again. Remember, we got a reading of 23.4, I believe. There it is, 23.4. Well, guess what the last week's reading was? Even lower at 24.7. 2 weeks in a row under the 23 level. That is very, very rare. Now, what we did also was put more information on here for you. The other chart stopped right around here in 2016. And so there were only, 1, 2, 3 other occasions where you got down to around the 24 level. Now, again, I should explain what the 24 means. This is on the AAII sentiment readings, American Association of Individual Investors. This is bulls minus bears. So if there are more bears than bulls, it's in negative territory. And this is showing us that as of the last reading, there were 24.7% more bears than bulls. Okay? So that's a remarkable reading. It happens, as you can see, it does not happen very often, and almost always when it happens, it's within perhaps a few percent at the most and a few weeks at the most of an important market bottom. Here, you saw these before. Now, here's the ones you didn't see. This one occurred in April of 13. It was a minus 35.2. But the very next week from there, on April 18th, it went to 21.4, so it immediately moved up. They very rarely stay in this territory for long. The only other times, well, let's go back even further. Let's look at this maximum thing that takes us all the way back. Here's the 2009 bottom right here, February 26th. Okay, now, how long did that last? It was a 1 week reading there at 30.8. The very next week went to minus 3.3. So that was another time. Let's put a little horizontal line in here to give you around where the 24 level is, right there, okay? So even in that huge bear market through '08 going into '09, how many readings did you get that showed more than 24% bears than bulls? Very, very few. So leading right up to the bottom in '09, and then go back from there, the last time it happened again was all the way back in 1990. So I want to emphasize how remarkable these readings down here are in terms of the AAII readings, okay? They're truly remarkable readings showing a lot of bearishness. This is not the kind of reading you would expect to see at an important market top or pre-crash. In other words, those of you that might be looking for a crash for these levels, with this kind of reading, you're generally not going to see something like that occur. Okay? What else did I have a note for here? Oh, I know. I wanted to show you on a chart where these two readings were, okay? So our old chart, let's bring our old chart back. Well, let's bring it back. Here's the old chart we showed you. We went to 2016. There were two other times when the market went down that low. One of them was April 11th of 13, and the other was August 26th of 10. So what did I do? Well, I put those on the chart again. Remember, I showed you where they occurred on the chart before. And now I'm going to go to this chart and show you where they occurred price-wise. Okay? This is the August of 2010 reading right here. Would you say that was a pretty good place to buy? Would you say there was vulnerability in the market at this point right here? I don't think so. So now let's go to the next reading I showed you, which was this week right here. Now this week was interesting because this was a 2013 reading. Indeed, from April 11th to 13, there was vulnerability. This was about a 2% decline right here. So we see those in a half a day nowadays. This was 2%, but then look at the level. From this level, the Dow never looked back again. So again, it may have been a week or two premature, but this was another great buying opportunity. Is that going to be the case currently? I don't think so, but it's telling us that risk should be limited with these kinds of sentiment readings. That's our picture that we paint right now on Sunday, June 28th, with the week ending June 26th. And we'll be with you. A quick word about updates. For those of you that are now paying for these updates, some of you still have a trial, but a lot of you are paying for them. We promise at least 200 updates a year. And I think that translates into like 16 or 17 updates a month that you pay for. So that's what we promise. If we were to take a vacation for a couple of weeks, then obviously that would not count against you. Your subscription for that period would be extended. But what we typically promise is that there are 21 trading days in a month, and we will cover you with these updates on at least 16 or 17 of those trading days. It may be 21, it may be more with special updates, but that's our guaranteed minimum. That's it for now. We thank you so much for watching. We'll be talking to you again tomorrow. Have a great day.